Hey guys, so Tesla recently announced that a 5-for-1 share split is going to be taking place at the end of August. And in this video, I'm going to be looking at what this means for people who already hold Tesla shares and whether Tesla is a company that you should look to buy more shares in right now before the share split happens. And I'm also going to be looking at what this could mean for the price in the future. Just quickly guys, before we get into the video, be sure to subscribe and like the video if you do enjoy. It really does help me out, and let's get into it. So first of all, what are happening to current shares and how is this going to work? So recently a 5-for-1 Tesla stock split has been approved by the board of directors with the aim of making stock ownership more accessible to employees and investors. So that means that each stockholder of record on August the 21st will receive 4 additional shares for each share that they hold. And this is going to be distributed after trading closes on August the 28th. So then trading will begin on a stock split adjusted basis on August the 31st. So after this does happen, there will now be 5 times as many Tesla shares in circulation than there was before, with each share costing 1/5 of the pre-split price. So that means that if the share was $1,500 on the day of the split, each share will now cost $300. So is this good or bad for investors? Now, if you are a Tesla investor, there will be no change in the value of your current position, and this is because no value is being gained or lost. So if you are holding a share for, let's say, $1,500 pre-split, you'll now be holding 5 shares that are all worth $300 each, so your net asset value will still be the same at $1,500 total. However, it will now just be fractionally split up. So upon the big news, or the big announcement I should say, the Tesla share price shot up by 6.5% after hours from $13.75 per share to $14.65 per share. So no other news was announced relating to Tesla at the time. So that does suggest that this was, or this after hours increase was purely due to the share split announcement and people getting excited about this. So why did this happen? So if the value of Tesla holdings will stay the same post-share split, then why did the price per share shoot up? So it all comes down to the share price being more affordable and accessible to the average investor with a bit of spare cash to invest. The main reason why companies carry out share splits is to make shares appear cheaper to the general public. So it will now be more accessible for many retail investors to buy a Tesla stock, and psychologically, the £300 or the $300 price tag per share is more appealing to a lot of investors and will make them more willing to buy at this price. The people who just straight up can't afford to buy a $1,500 share of Tesla right now will now be in the position to buy 1 share of $300, or if they've got a little bit more, they could buy 2 or 3 shares while still spending less than what 1 share costs right now. There are also psychological reasons involved too, as a lot of people feel better about themselves if they own a full share or several shares rather than owning a fraction of a share. So let's say if you can afford to buy 3 shares for $900, people psychologically feel better about themselves to own 3 shares, which are full shares, rather than owning, let's say, 0.6 or 0.7 of a share. It's just all comes down to mental and psychological reasons, to be honest. So all of this technically increases the demand for Tesla shares in the future, which will drive the price up. In the short run, a share split announcement will cause a stock to rise in price most of the time due to investors getting excited about the stock becoming more accessible and more in demand. And this is likely to be the reason why the 6.5% after hours spike did happen with Tesla. So does a share split bring future success for the company? So it is pretty much impossible to say, as there are lots of other factors that are at play, but based on historic results from other companies, it's safe to say that it does help quite a lot of the time. So if we look at Apple, they're an example of a company that has carried out several share splits in the past, but has continued to enjoy non-stop growth throughout all of them. If Apple had never had a share split, they may not have experienced the same incredible growth that they have done. This is mainly due to the share price being an extremely high price, or it would be an extremely high price right now if there weren't any share splits. And this acts as a large barrier to entry for a lot of retail investors. So as well as this, the massive price tag for Apple shares may be daunting for some investors and may put them off buying a stock due to them being sort of all in or nothing if the share price was incredibly high. Having smaller bite-sized shares allows people to sell off fractions of their holdings as well as top up by small amounts when they get more funds. So if the stock price was incredibly high, this would not be possible and therefore would most likely deflect some people away from taking up a position, reducing the overall demand for shares. So it is important to remember that although stockbrokers offer fractional shares in the US and the UK, and it's quite common to see that happening with the rise of popular new investing apps like Robinhood, it is not so common internationally, and a lot of international investors do not have access to fractional shares at all. They have to buy shares in full. Many people around the globe would therefore not have access to buy a full Tesla share up until now, where they might be able to have more access to do so. So people in the US might not be too bothered by the share split because they know they can always buy or sell a fraction of a share. However, in other parts of the world, this will break down a significant barrier to entry for investors and is therefore a pretty big deal for them. So moving on to why Tesla could continue to rise after the share split. So as discussed, the share split is going to make Tesla shares more accessible and affordable for a lot of retail investors, and this potentially, as discussed before, drives up the demand for the shares even more, which increases the price. And again, there are a lot of psychological benefits and reasons why the Tesla stock growth might be accelerated by this share split, and how this might be a catalyst for even more growth in the share price. People are more likely to buy shares if they know that they can afford to buy at least one or two full shares. Some people tend to not like buying fractional shares as they don't believe owning a fraction of a share is a valid achievement or investment, and sometimes they lose self-esteem knowing that they can't afford to buy a full share themselves. So even though the share split means that owning a full share will be the exact same as owning 0.2 of a share before the split, so again, psychologically, this still makes some people happier to own a full share. And also, a share doubling in price from $300 to $600 is something that many beginner investors believe is more likely to happen than a share doubling from $1,500 to $3,000. Psychologically, a $300 gain is more believable to some people, especially the beginner investors, compared to a $1,500 gain in a lot of people's heads. So many retail investors aim big when they buy into a stock, especially with Tesla, and they want to buy into a stock that they think they can sort of double their money on. So having a share price at the lower end of the scale, such as the $300 price tag, will make it more likely for some investors to buy into the stock, as they believe personally within themselves that they're more likely to double their money. And those people who are experienced in the stock market and experienced investors will know that this is not the case at all. But again, it all comes down to like beginner investors and the mindset difference. So there really is, it really does matter to some people what the price tag actually is on the stock. And it all comes down to just psychological reasons. The more experienced and knowledgeable investors won't let the share split affect their decision making at all. But the people who are totally inexperienced and new to investing are more likely to succumb to buying Tesla shares for these psychological reasons. And that is all for today's video, guys. Be sure to leave a comment. Let me know if you've already bought some more Tesla, or let me know if you're going to buy some more after the share split. I'll be really interested to know what your position is in the company. Also, be sure to leave a like if you enjoyed it. That really does help me out. And again, be sure to subscribe if you want to see more videos like this in the future. So apart from that, guys, thanks for watching.